Drop a like and do share. Leave your comments and do not forget to subscribe for more videos.
Hello students, welcome to edupediaworld.com, your online portal to the world of invaluable knowledge. Yesterday, we discussed the derivation of the formula for future value of a going annuity, which is a into, within curly brackets, 1 plus I to the power of n minus 1 plus g to the power of n, curly brackets close upon I minus g. Let's move to not so common but yet somewhat remotely prevailing concept of perpetuity. As I mentioned, that this is not so common nowadays because perpetuities are not something which we shall be coming across quite too often, but since it is there, it is a part of our understanding of the time value of money. We should try to understand the concept of perpetuity, although it is rarely used nowadays. Since it used to be there, it's better that we have a discussion or we have a word or two regarding perpetuities as well. Now, what does the term perpetuity mean? What is the meaning of the word perpetuity? Perpetuity has been derived from the word called perpetual, and perpetual means something which lasts forever. Technically speaking, by going by the formula, perpetual is the term with the help of which the word perpetuity has been derived, and perpetual actually means that anything which is everlasting, which is non-ending, which is never expected to come to an end, so which lasts forever. So this something which is lasting forever, does it bear any resemblance with our study of finance? At least in the case of companies, it is remotely it can be related. The terms are relatable because we follow the going concern concept, wherein organizations or economic entities are expected to grow through and go through a unidentified time frame for a very large time frame. They don't usually come to an end with a particular board member or a particular person of the management, whether they are or any other stakeholders are there with the company or they are not with the company. It hardly makes any difference. The life of the companies goes on forever, for a very unforeseen future, for a very long term, until and unless the company is deliberately being brought to an end, or the government puts an end to the company due to some violations, due to some flaunting of the rules, due to some non-permissible activities. So if some untoward things do not happen, I mean, if some forcibly the company is not being put to an end, or the company is not being liquidated, the company is not being dissolved, the company is not being declared as a bankrupt, or the government doesn't put an end to a company, if such untoward conditions do not happen, then companies are expected to last forever. So using that concept, sometimes the word perpetuity is being related to it, but still in the terms of the financial instruments you will find, you won't really find of such financial instruments which have been deliberately issued for a perpetual time frame, for an infinite time frame. But still we say that in the cases of equity shares, in the cases of some endowment funds, some college funds, so in case of the house properties, we sometimes have this very slender assumption, a very weak assumption that they are expected to be perpetuities, or their cash flows are going to last forever. Of course, even in the real life, even though equity shares are the part of the permanent capital, they're the part of the core capital, they are not being easily redeemed. Equity shares are not meant to be redeemed, unlike the debentures or the bonds or the long-term liabilities. Equity shares are returned by the company to the equity shareholders, either by share buybacks or by the way of the special dividends, but again they are not obligatory on the part of the management. Yes, in the case of liquidating the shares in order to get the block money out, the shares are being listed on the stock exchanges, on the secondary market, wherein the investors can sell off their equity shares in the secondary market, thereby realizing their invested capital against a capital gain, or sometimes a capital loss might also be inflicted upon them, because the capital gain is never guaranteed, and the companies till the time with the equity shareholders are hanging on to the particular investment, the companies keep on paying the dividends, and once they are being sold and offloaded in the equity markets, then the new purchaser of the equity shareholders becomes entitled to the next stream of the dividend. So equity shares, they keep on changing hands because investors, even if they are holding it for a very long time, we know that the lifespan of a human being is never till infinity. So during his lifetime, he might he might hold on to the equity share for 10 years or 15 years, 20 years, 50 years, but it is never possible that he shall be holding it for the next for the next infinite time frame. So after a fairly long time, or after a span of 5 years, or whenever he or she wishes, like, the equity, he can change the hands of the equity shares, and the new recipients of the equity share, or the new owner of the equity shares, they keep on changing. But still, for conceptual purpose, for later on you shall be seeing that for deriving the valuation formula for equity shares, we assume that they have an infinite life. So it is being assumed. And the same happens for the case of the rental properties, because if you are buying a house property and we are giving them on a rent, it is being assumed that the cash flow from the rent will go on for a infinite time frame. Of course, in the real life also, no house property can ever live forever. Of course, it might at best live for a very fairly long time as compared to other investment options. But still, it is for an easier calculation, we assume that they are supposed to generate rental cash flows for infinite time frame. Same happens with endowment funds for university. There are some universities, there are some bursary funds, there are some scholarship funds, wherein the patrons of the universities and the ex-alumni, they keep on donating generously to the fund, which is being reinvested in order to generate a cash flow, with the help of which the scholarships are being paid to the eligible students. So these are some of the cases where the perpetuities, the concept of perpetuities, or rather I would say the logic of the perpetuity is being still applied. But usually we don't find it in the case of the your borrowed capital, or the debentures bond, or the bank loans, etc. So let's have a quick word regarding perpetuities. So till now we discussed about such cash flows which have a finite life, that is, the n was a finite number of years. Of course, till now we have discussed n to be 5 years, 10 years, 12 years, but perpetuity refers to a stream of cash flows with an infinite life, that is, n extends to infinity. So perpetuity refers to a stream of cash flows with an infinite life, that is, n extends to infinity. Perpetuity cash flows may be in the form of ordinary annuities or growing annuities. Yes, the perpetuities can be in the form of the ordinary annuities or even the growing annuities. Though perpetuities are not very common in the world of investments and corporate finance, still the classic examples of perpetuities cash flows are the cash flows arising out of equity shares, rental cash flows on property, university bursaries, just to name a few. These are the points we have just discussed right now, that their perpetuities represent such cash flows which last for an infinite time frame, where the n is not defined, the n is not a fixed or stipulated time frame, the n extends to infinity. Perpetuity cash flows may be in the form of ordinary annuity or growing annuities. They are not generally being found across a wide range of financial instruments, but still some of the common cases where the perpetuities may exist. They are the equity shares, they are the rental yields, or the rental cash flows, or even your college endowment funds, the bursary funds, etc., etc. So that's all for now, students. I hope you had a good understanding of the topics which we discussed till now. So in the next session, we shall be discussing a bit more regarding the perpetuities and the derivation of the formulas. Till then, students, goodbye and happy learning. Thank you.